Eric Mwathe for the weekend of March 7th and March 8th, 2015. Let's take a look at how markets closed on Friday. Dow was down 1.54, Nasdaq was down 1%, S&P 500 1.4, and the VIX was up about 8%. And stay tuned, I'll be mentioning and discussing the VIX chart because I think there's something we can glean from how the VIX is trading, so stay tuned for that analysis towards the end. And we see that gold was also down about 2.45, and so was crude oil. For the week, the S&P 500 was down 1.5%. The Dow was down also 1.5% for the week, and we see that the Nasdaq was down the least, down 0.73%. Let's begin by taking a look at the Nasdaq weekly. We can see that yes, we've had a slight move lower, really nothing destructive yet. That's a very small move for the week. If we take a look at the RSI, we'll see that the market is showing resistance on this line where it's been stalling the last couple of weeks. Now the thing the market is going to have to decide is if it can hold above the 4800 level. The exact level to watch is 4806.86. That's the previous weekly closing high. If the market ever comes back to that level and holds, then the breakout is still intact. Now if we take a look at the RSI again, the question becomes whether this negative divergence is going to be a problem. As we can see, the market made higher highs. Obviously, the RSI has been making lower lows over the last couple of months, in fact going back to 2014, and this could be a problem because of this long-term negative divergence line. If we take a look at the Nasdaq Daily, we can see that the market had come back to this line on the RSI connecting the tops there. Once the market made contact with that, question was whether the market would sustain higher prices. Seems like this has been the reason why the market is starting to pull back. Down the road, this is where the market has been finding support over the last couple of months, and so if we ever come back to this level here and bounce, that might still suggest that the market is still healthy. So the market can take more damage and still be in a rally mode. So it's going to take a lot of momentum to kill this market. You can also see that it needs to test the previous daily closing highs there, and if those daily closing highs hold also, there's nothing wrong with a pullback. So there's a lot of damage that can be done and the market can still be okay. It's very hard to start shorting the market outright just because of one day drop. We have to be aware that this market has been very resilient for quite a while. We take a look at the Nasdaq from a 60-minute chart, and we can see what the market did here is on the hourly, we were making higher highs in price, but the technicals were making lower lows. And since that was the setup, we were looking like we could pull back, and finally we did get that pullback. We can also see that the market broke below this line of RSI support here and actually came back and back tested the same line. So this back test of that line is the reason why the market came off the highs this week and ended the week with a down push. Now on the Nasdaq hourly, this is where it's been finding ever since it broke out here. So this RSI movement here coincides with this nice entry, and since this entry here, market has gone on to record 15-year highs. If we draw a line connecting that RSI line, you can see that this is where the market has been bouncing. For example, just a couple of points, entry back into that green line. There was a nice entry there. Recently it came here, which were these lows. It touched that same line there and pushed higher. So we see that we are breaking below that line of support, which could be a troubling sign as to what the market is trying to do here. This line should have held if the market wants to rally, but on an hourly we seem to have broken what has been a line of support, and all that does is open the possibility for lower prices. This is evident if you take a look at the Nasdaq 30-minute chart, which shows this improving highs here in price on the 30-minute chart, but we have this line of declining RSI strength. In fact, if you extend the same line, we can see that at the highs for the week, the market came and hit that level there. And since hitting that RSI topside, the market has pulled back. It also coincides with a prior line of support on the RSI here. So that is where the market had come back to those two lines. We saw resistance. Since then, we've been down. Now let's take a look at the Dow weekly. We can see that the Dow had made higher highs on the weekly chart, and yet we were making lower lows on the weekly RSI. That negative divergence could become a big problem. Don't forget that the market was making higher highs, yet the weekly RSI failed to move above 61.8. So that is the worst type of negative divergence, and that could become also a problem in the market. Keep in mind, we failed to hold above 18,053.71. Failure to hold the previous weekly closing highs could also be signifying that the market here has given up momentum, and the break back below that threshold could suggest that the market is open to lower prices. Let's take a look at the Dow Daily. So one of the main reasons why I believe the market had a big drop on Friday is because we moved below 50 on the daily RSI. And as we slash below that threshold of 50, you normally tend to get a big swing in price, and that's why we had a big day on Friday. Now if we take a look at where the market is trading, the Dow is essentially back to the 50-day moving average. So I'm sure a lot of people are waiting to see whether the 50-day is going to hold. Also keep in mind that the market made higher highs in price on the daily, but we can see that the RSI also made a lower low. So that negative divergence could be also one of the reasons why the market has given back recent gains. If you take a look at the line connecting the prior breakout level, so this line here, which we were discussing over the last couple of weeks, this was a nice entry for the market when the market moved above that line there, which was this breakout. Since then, the line extension has given us short-term highs. As far as the Dow is concerned, it gave us RSI resistance there, which was that price high, and we saw the market pull back. And the same line extension has now given us the most recent high in the market here. If we take a look at the Dow from an hourly chart, we can see that the line we had been drawing for quite a couple of weeks there, this line here, that was telling us the Dow was struggling to improve on its sentiment as the market made higher highs here. We can see that the RSI was showing resistance on the top side of that RSI hourly chart. Here I am using an RSI period of 26, and because of that negative divergence line, we can see that eventually the market has started to pull back. There was also a line of support here that the market was trying to hold. Seems like we broke below that line, and from there, as you can see, the market is down. Now there is this green line on this chart is where the Dow has been bouncing, and as an example, you can see this movement here gave you the lows, support here gave you short-term lows, and also support here gave us these lows in the market. So it depends on what happens around here. If the market can bounce back above that green line, maybe there is hope, but the more we trade below the green line, the more this is a different market. And as you can see, even going back in August, that was the low that held the market off the lows there, and also this low here. So we can see that this is a make or break situation for the Dow. It needs to get back above the green line, otherwise we might be looking at a market that is now more than likely changing its behavior and could be going lower. A quick look at the Dow 30-minute chart. We can see improving highs here on the 30-minute chart, declining RSI strength. In fact, if you extend that line on the negative divergence line, it also becomes resistance here when the market was trading here, and since then it's almost been a straight shot down. We also break this line of support on the 30-minute chart for the Dow. So the line connecting these lows broke down, and so we are looking at a market that is starting to behave a little bit different. Where it was finding support, we seem to have broken below that support on the hourly and on the 30-minute charts. Let's take a look at the Dow Transports on the daily, and we can see on the daily, ever since the Dow Transports made this improved highs on the daily, RSI made a slight low. Since then we haven't been back to those levels here. In fact, if you take that break, that RSI point, and draw a straight line on the Dow Transports, since then it has given us short-term highs. Resistance here with uniform activity was that high. Recently we came here with uniform activity for another high. We also saw that the Dow Transports cracked below 50 on Thursday, which is one of the reasons why we started thinking as of late Thursday that the market was due for a pullback. Interestingly enough, we are back at a level where the Dow Transports have been finding support, which is this green line. And as an example, you can see that we held there with uniform activity, nice lows. We held here with uniform activity, nice lows, and also we held here for those lows, and also we bounced on the line, which is here. Recently we came here, we had a double bottom support, which was this lows. So the market has come back to that level. What happens around here is going to determine whether we bounce or whether we break and continue lower. A quick look at the S&P 500, and just like the Dow, we made higher highs on the weekly price level, but we made lower lows on the RSI. Also, this RSI high points, while the market was making all-time highs, came when the S&P 500 failed to move its weekly RSI above 61.8, and that is the worst type of negative divergence. So maybe we are looking at a market that has already seen major highs, and probably over time we might look back and say, boy, how did we not know that was the major high? The other thing to keep in mind is as long as the S&P 500 is holding below 2088.77, this is a broken market because the breakout has failed above the previous weekly closing high. If the S&P 500 can recapture that 2088.77 level, anything above that suggests that the market has repaired that broken chart. So below that threshold, the market is bearish. Above 2088, the market is okay. S&P 500 daily, we had that big drop on Friday as the S&P 500 broke below 50 on the daily time frame, and again we saw that we made higher highs, yet the RSI did not show any improvement, coming back to a level where it had stalled before. This stall point on the RSI also gave us a short-term high prior to this pullback here. So we came back to that level and we did show resistance, so it made sense that the market, since coming back here showing resistance, that eventually we are starting to see the market pull back. Is the market broken? No. The reason why I say it's not broken is because we are yet to break this line of support. Every time the market has been coming back here, the S&P 500 has had a reason to rally. So all these points, so until we break that line of support, it is difficult to call this a broken market. Uniform activity below that line and back above it was that support line there, and also it held here, which were these lows. So until we break that green line support on the daily RSI, it's hard to call this a broken market. Now let's switch gears and go to the Canadian market. Take a look at the TSX, and we see here that the line we had drawn the last couple of weeks, so this line here where the market has been showing resistance or breakout, as you can see, resistance here for a move lower, resistance on that line for a move lower. We finally jump above that line for a move higher, support on the line for a move higher. We again come and break below that line, which is here, for a move lower, resistance for a move lower, and you can see here double top, indicating that more than likely we might be setting up to go lower on the Canadian market. Keep in mind, if we break below 50 on a weekly time frame, that would suggest a big down week is around the corner. On the daily, we can also see that ever since this high, which came on this level here, the market has come back to that level twice since then. So this break point gave us the high, which resistance there, which was that high, and now this became resistance, this level here, and now we're starting to see reason for this market to pull back. So this week I'm going to take out one chart for Apple, and it's going to be the monthly chart. And even though it's down slightly, I think we have to be aware that as long as the stock is holding above 69.10, the stock should be okay. So as long as it's holding above that threshold, I would give it the benefit of the doubt. Now, I did mention the VIX at the beginning of the video, and I want to discuss the VIX here. Two charts, actually three. One is, take a look at where the VIX closed on Friday, which means that we have to be aware if the VIX jumps above 50 on the weekly time frame, that might suggest a big down week for the general market. The last time it jumped above 50 was here in December during this spike in the VIX, and the market had a slight pullback. So keep that in mind, the fact that the VIX closed just underneath 50. We take a look at the daily, and we can also see that it closed just under 50. The risk is that if it jumps above 50, it's going to spike and the market is going to have another daily drop. The last time the VIX had another nice jump above 50 was here during this move. So be aware that the VIX closed in what can net be said. The risk is it jumps above 50 on the daily and the weekly charts, and which would suggest a big down week or a big down day depending on how things go. But what is curious here, if you take a look at the VIX from a 6 months hourly chart, we can see that it's come back to a level where it's been showing resistance here, right there. So this most recent highs in the VIX have been coming when the VIX comes in contact with that line on the hourly RSI. I'm using a period of 26. All these highs, this is where you had to go along the general market. And even this high was when the VIX found resistance there. So it came back here late on Friday, and we seem to have hit that level and are pulling back. So this could suggest hour to hour that the market is due for a bounce higher. All right, let's conclude by taking a look at the monthly charts. We begin by taking a look at the Nasdaq. The Nasdaq continues to hold above 69.10, which is a sign of, no, 69.10, yeah, which is a sign of strength. It's been trading above that threshold since May of 2013. We can see that it continues holding above the prior monthly closing high there. So the Nasdaq looks good. It hasn't broken down. Take a look at the S&P 500 monthly, and we can see that this is starting to roll over, closing just above 69.10. So the risk is that this could drop below 69.10 for the first time since March of 2013. Also keep in mind that if it drops below this level here on the monthly chart, and the level to watch there is 2067.56. Above that level, the market is good. If it cracks below that, that could be bearish. And last, let's take a look at the Dow. You can see that the Dow, as of right now, we are looking at improving highs on the monthly, declining technicals. So that negative divergence could be a problem. Also, we see that the Dow is now back below 69.10, another red flag. The level to watch for the Dow is the previous monthly closing high, and that is at 17,828.24. Above that number, the market should be okay. If it cracks below that, that could be bearish. Subscribers, go ahead and log on for part 2. Eric Mwathe, good luck, peace, and blessings. Have a good weekend, guys. I am out. Woo!